WestJet's president and CEO, Ed Sims, will be speaking to the media later this morning about the airline's pending sale to Onex. WestJet, of course. WestJet's stock price soared on Monday, closing almost 60% higher on news it was being sold by the Onex Corporation out of Toronto. The airline says the $5 billion purchase deal will allow them to continue with its plans to expand into new international markets. For a company that began with a few hundred employees and a handful of planes, the multi-billion-dollar takeover may be surprising to some, but industry analysts say there is little cause for alarm. Global News Radio's Danielle Smith joins us now to continue this conversation. You're expanding a little bit on this on your show this morning, Danielle.
I am. I think we're all asking, how much money does Jerry Schwartz have in Onex? You just wouldn't think there are that many companies that could just out of the blue lay down $5 billion and take a company private. I think a lot of us had probably gotten into the mode of thinking that there's just certain companies, once they get to a certain size, that just have to be publicly traded. So this is a really interesting deal from that point of view. The other point of view is how undervalued the WestJet shares must have been, trading at $18, and now this deal is going to be $31. So big premium for the owners of the company, which have been by and large the employees. So there's going to be a lot to try to sort out with this deal, because you'll recall Onex wanted to broker a deal all the way back when Canadian was having its troubles and they were unsuccessful. So you can imagine that you've got a company that's thinking, this is the one that got away. So he's been obviously thinking about the airline business for a long time, has some ideas about what to do. And I think the employees are going to be wondering what that means, because restructuring often means job losses, although they've been quick to get to the table saying, no, we're not going to cut any jobs. Oftentimes as well, when you have an Eastern buyer who comes in and buys a company, you think, does that mean that the corporate headquarters are going to move? Well, fortunately, Jason Kenney's 8% corporate income tax cut, probably with a profitable company like WestJet, sweetens the deal for keeping WestJet here. So I think there's a cautious optimism that this is going to be very good for all players involved. So we're going to talk with Carl Moore today, who is an airline industry expert, to get his take on why this deal, why now, and what the future holds.
Just about 20 seconds left here, Danielle, but we know we are hearing from WestJet today. They waited over 24 hours to address the media. What are we expecting today, do you think?
Well, I'll cover that as well when it comes out, because I think people are really interested in hearing what they have to say. It must be a bit of a blow to the founders of the company, those who've been there for a long time, because they've got a particular culture in the organization that is empowering the employees with share ownership. And so you're doing a big corporate shift away from what has made WestJet. So I can imagine it's going to be with some mixed feelings. And oftentimes when you do end up with a takeover, the guys in the C-suites are the ones that get the axe. So those might be the names that we see on the chopping block. That might also explain why we had to wait 24 hours to hear their response.
Fair enough. Okay, Danielle, thanks for this. Have a good show today.
Thanks, see ya.